Hello everyone, my name is Moji. You're watching a Bitcoin Bubble news channel. I'm just trying not to do anything. One thing I've been paying attention to is things like the ETH Bitcoin cross. ETH got into the hate zone, which I find interesting. The Bitcoin cross then starts to break higher and bounces right off the bottom of the band. That interests me because it's the real start of altcoin season. Since the ETF has been delayed a bit, we can see why it would break a bit higher than here. We saw this happen with Bitcoin too. The run starts long before the launch. That then moves money up the risk curve again. After that is banana zone. Being careful in the banana zone is important for me because that's where I can make the most money. So even if you're not doing anything, you have to pay attention because A, you don't want to lose your coins because the banana zone is the worst place to lose them. Keep your coins safe and don't mess things up by having the wrong things. As you move further away from the risk curve, you miss out on the whole crypto market rise, or you're stuck in the last story. I've seen people so far away from the risk curve in some weird South Korean political token that they missed the whole rally. For example, you're stuck in a big layer one from 3 rounds ago and are sure it will come back this time. When you look at Bitcoin's performance next to Warren Buffett's portfolio, which includes Apple, Bank of America, American Express, Coca-Cola, and Chevron Corp., you can see that the risk-reward profiles and past performance are very different. Lazy Portfolio ETF statistics shows that over the past 30 years, Warren Buffett's portfolio has grown at a rate of 10.3% per year with a standard deviation of 13.67%. This means that the returns will be moderate and the success will be pretty stable over time. Typical U.S. company stock portfolios, on the other hand, have had similar returns but bigger standard deviations, which means they have been more volatile. Since its start in 2011, Bitcoin has given investors amazing profits every year, on average 104%. This is very different from the returns of Buffett's portfolio in U.S. stock portfolios, which have regularly done better over the last 13 years. Even when compared to gold, which has an average yearly return of 6% over the same time period and is often thought of as a safe investment, Bitcoin's growth has been much faster. U.S. stock portfolios have CAGRs that are similar to Buffett's, but they are more volatile, so buyers who don't like taking risks might not like them. On the other hand, gold is relatively stable and can be used as a hedge against economic downturns. Bitcoin is becoming more and more popular among traders and buyers because it is seen as digital gold that can protect against inflation and currency devaluation. Institutional usage has grown even more since spot Bitcoin exchange funds or ETFs were introduced in U.S. Companies like MicroStrategy and Tesla added Bitcoin to their holdings. However, Bitcoin's price is still very unstable, with big changes happening all the time. This is in contrast to Buffett's portfolio, which has stable profits. Still, it has been less volatile than a lot of individual stocks in the S&P 500, like Tesla, Meta, formerly Facebook, and NVIDIA. Buffett's portfolio shows a cautious, long-term investment plan with steady returns and manageable risk, even though it sometimes changes, as with his recent investments in crypto banks. Bitcoin, on the other hand, has had much higher returns, though it has had some big ups and downs over its past. In conclusion, Buffett's portfolio and U.S. stock portfolios are stable and offer moderate returns. Bitcoin, on the other hand, is a high-risk, high-reward opportunity that has investors wanting substantial growth potential, despite its volatility. In the later game, Aptos flips Solana. That will be put out there. That's all I have to say. Also, I'm a little annoyed. I have different ideas about that because I'm on the basis of SUI. We'll say move is something I think there will be a lot more to say about the move procedure. I'm only really interested in the next group of big wall ones. Some of them are pretty cool in that game. This next trade is in that part of the banana zone, which is why it's a good idea. That trade made a lot of money the last time around and the time before that. This time it will be the same. They have mostly gone up since their low points. Some of them came out at bad times in the cycle. It's a pretty good setup for some of these. Monad, you might be able to throw Celestia. At this point in time, Monad might not have come yet. There are a few people around who might be important to this story. Look around, that's partly because, if there's any instability, one of those two might fall out. There is a good chance that violence will happen at some point because of how split society is. When you get right down to it, though, everything ends up making money. In other words, the U.S. is more likely to make money when bad things happen. So risk assets tend to do very well during election years and the year after, since everyone is buying votes and then having to prove themselves by picking up the pieces and paying the interest on the debt. There you have it, the military side. Then there are all the retirees and baby boomers who have all the votes. They do want healthcare though. The third thing that needs to be thought about is who will pay the interest on the bill. The magic money machine is the only way to do this. It looks like there aren't enough dollars in the world, right? We lost Us.Thanks. A big Swiss bank was lost. Do you agree that we're losing yen? There aren't enough coins. Also, Yellen is going to China twice, right? She's there because she sells bonds for a living when she's not working to get Joe elected. She's the Mike Milken who is selling bad bonds and going on a road show to China. They say, sure, we'd love to buy your bonds, but we don't have any dollars. We'll buy bonds with the money you give us. They need to figure out how to do that. No one really wants to give China direct swap lines right now. Most likely they do it by interfering with Japanese bonds and currencies. The G20 or the G7 is going to happen soon, either way. Everyone will have enough money for the system to work and for everything to happen because of some magic allowance. In other words, there has been no freedom since 2008. I also don't think that central banks are very free from each other. I believe the BOJ taught everyone how to do it. Everyone has done the same thing. Their problems are the same: too much debt and people living longer. Everyone has the same card. What about the BOJ and the MOF? They stopped being separate in the 1990s, even though they still are on paper. This is all because the Treasury wants to pay off this debt, which has been due since 2008. Warren Buffett's portfolio includes top stocks like Apple, Bank of America, American Express, Coca-Cola, and Chevron Corp. When you compare Bitcoin's performance to these stocks, you can see that the risk-reward profiles and past performance are very different. The Lazy Fund ETF says that over the last 30 years, Warren Buffett's fund has grown at a compound annual growth rate (KR) of 10.3%, with a standard deviation of 13.67%. This means that the returns will be moderate and the success will be pretty stable over time. Typical US. Company stock portfolios, on the other hand, have had similar returns but bigger standard deviations, which means they have been more volatile. Since its start in 2011, Bitcoin has given investors amazing profits every year, on average 104%. This is very different from the returns of Buffett's portfolio and US stock portfolios, which have regularly done better over the last 13 years. Even when compared to gold, which has an average yearly return of 6% over the same time period and is often thought of as a safe investment, Bitcoin's growth has been much faster. US stock portfolios have CAGRs that are similar to Buffett's, but they are more volatile, so buyers who don't like taking risks might not like them. On the other hand, gold is relatively stable and can be used as a hedge against economic downturns. Bitcoin is becoming more and more popular among traders and buyers because it is seen as digital gold that can protect against inflation and currency devaluation. US companies like MicroStrategy and Tesla have added Bitcoin to their cash reserves, which has made institutional acceptance even stronger. Spot Bitcoin exchange-traded funds, or ETFs, have also been introduced. However, Bitcoin's price is still very unstable, with big changes happening all the time.